I'll start.
Yes, please.
Yeah. So good evening, everyone. Today I will be presenting on Shilpa Medicare Limited. It is one of the world's leading suppliers of oncology and non-oncology APIs and intermediates. Their vision is to provide affordable healthcare to the world. So let's talk about the formation. So Shilpa was incorporated in 1987 at Raichur in Karnataka. Firstly, they started with commercial production of an antibiotic bulk drug. So initially, it was a private limited company. It was known by the name of Shilpa Antibiotics Limited. So the technology for that bulk drug was developed in-house itself. And during their first year, they had installed production facilities to manufacture that specific antibiotic drug. And eventually, today they have become the leading API and formulations manufacturers with strong capabilities in the therapeutic area of oncology. And they are also present in the non-oncology therapy areas and has recently forayed into formulations, I think in 2017, and biologics, oral dissolving forms, and transdermal patches as well. So they supply more than 30 oncology APIs, including key products such as capecitabine, gemcitabine, hydro, sorry, hydrochloride, etc. And they also export to US, Europe, Japan, South Korea, Russia, Mexico, Brazil, etc. So they have around over 44 oncology and non-oncology APIs, and their formulation product ranges consists of 16 injectable dosage forms, 19 oral solid dosage forms, and 13 formulations. So they also do contract manufacturing of various dosage forms such as tablets, capsules, then liquid injections, then other injectables and powder injectables. So let's talk about their journey. First, 1987 they were established, and 1995 they became listed on the BSE. And in 2007 they acquired Loba, which is an Austria-based company. So recently they sold this subsidiary, but before that they had 8 manufacturing facilities, and 7 were in India, and this specific one was in Austria. So it was a step down subsidiary. So basically, Loba was an Austrian company with pharmaceutical production facilities in Austria. So their intention to acquire this company was to access the highly regulated markets there, and they already had pharmaceutical production facilities, which made it easier for them. So their focus was on biochemical diagnostics and organic intermediates and pilot and production scales and even APIs. And they had US FDA and EU GMP, Europe basically, their approvals for this. But as on 31st March 2021, they sold this to a company called Zeda Pharma in Austria for a sale consideration of 3.3 million euros. Then in 2009 they entered a JV with ICE and PCA of Italy. So under CRAMS, Shilpa manufactures and supplies only ursodeoxycholic acid intermediate, which is used to treat liver ailments, to this Italy-based ICE company and their subsidiary PCA. So ICE is the global leader in bile acid derivatives such as cholic acid and deoxycholic acid APIs. And so in order to scale up this specific acids intermediate supply, ICE and Shilpa converted their supply alliance into a 50-50 JV, and then they set up a greenfield facility with an investment of about rupees 1.5 billion at Raichur. So this JV, however, it ended in 2018, and this helped Shilpa garner proceeds of rupees 1.3 billion, and their investment was something around 800 million rupees towards this JV. So yeah, Next, in 2011, they acquired Rychem Life Sciences. So they ventured into formulation through this subsidiary, and this is a wholly owned subsidiary. It was, however, merged in FY13 with the main company Shilpa Medicare Limited. Then in 2013, to leverage their strong customer base for oncology APIs, they set up a formulation facility with an investment of rupees 1.25 billion in Jadcherla, Andhra, which is in Andhra Pradesh. So the facility was constructed in line with the US FDA standards and comprised of two oncology manufacturing blocks, that is injectables and orals. So their formulations business but however, yeah, they received an import alert in 2021 for this facility. So this has led to no new products being approved from this specific facility. And in 2017, they acquired Navya Biologics Private Limited. It is an aggressive biopharmaceutical startup based in Hubli, which is in Karnataka. It is engaged in research R&D activities in the fields of biologicals, and this company has specifically been in the development of biosimilars and product process technologies. So by acquiring Navya, what SML, the Shilpa did was they saved time on working on their biosimilar segment, which is currently does not contribute to their profit, but they're working on it and they have a very strong product portfolio for it. So, and yeah, in 2021, they commenced manufacturing ODF and transdermal patches. So they commissioned a combo line for ODF and transdermal patches. And the capability includes two dedicated lines for ODF formulations at their Hyderabad facility to cater to domestic as well as rest of the world market. And they have a state-of-the-art manufacturing facility to develop and manufacture novel tech-based products at Bangalore facility for their global markets. And they have a first movers advantage in ODF as well. So next we go to their business segments. Firstly, let's talk about API. It is their cash cow. It contributes 71% of to sales, and it remains their strategic backbone. And bulk of the profitability comes from API, as the formulations segment is struggling on the account of the import alert that it got from the US FDA, while biologics, the new segment, is still in the investment phase. And yeah, so they are active in the $9 billion API market, merchant API market, and they focus on specialty, small specialty molecules. And outsourcing by pharma companies is showing an increasing trend, and Shilpa is focusing specifically on the small molecule specialty API market that is typically characterized by complex chemistry and complex manufacturing and also high entry barriers. This is also one of the reasons why a lot of the CDMO partners that Shilpa has gathered prefers them. So they have two state-of-the-art API manufacturing facilities at Raichur with 9 dedicated blocks for oncology and 7 blocks for non-oncology. They are also heavily investing on their API R&D, which is like 12% of sales, and they are augmenting their capabilities across various API segments, that is peptides and niche oncology, intermediates, etc. So the API business is basically expected to grow on account of the increased capacity and backward integration. And they plan to introduce at least like 3 to 4 API molecules every year. They have approvals from European health authorities to sell APIs in the EU markets with 16 valid CEP certifications and 45 active US TFMs and more on the anvil. So they are well poised to grow business in the EU region, basically. And then we move on to the formulation segment. It currently contributes 21% to sales. So They have vertically integrated the formulation segment. They manufacture injectable dosage forms, ODFs, oral solid dosage forms, oral disintegrating films, and various prescription products for overseas and Indian markets. So they have three formulation manufacturing units located in Jadcherla and Hyderabad in Telangana and Bangalore. Sorry. Okay, no, yeah. The manufacturing facilities have the flexibility to operate for a wide range of batch of sizes and in various dosage forms. But however, their formulation segment has been posting a muted growth over recent years since 2021 on account of the import alert that it received on February 17th of 2021. So US actually contributed 36% of the formulation sales, largely on account of three exemptions. That is, there are three drugs which have been exempted from the import alert. In order to de-risk from the US focus, they scaled up their business in EU and in Europe and rest of the world, uh, basically focusing on sales of complex products. And yeah, so they have spent a lot to kind of develop a strong pipeline of niche products and molecules. So the resolution of this import alert, the US FDA issue, kind of remains very critical for them for monetization of these new molecules that they have spent so much on. So their formulation product, okay, I had already mentioned it. It ranges from 16 injectable dosage forms, 19 oral solid dosage forms under assembly. So next we move on to biologics. Currently, it is in the investment phase. It does not contribute to sales. It is like a strategic growth lever for Shilpa, and hence they are still continuing to make significant investments in this through their subsidiary Shilpa Biologics. So they have an attractive biosimilar pipeline with niche opportunities catering to high unmet clinical needs, which can add 15 to 20% as per the management to their top line growth. So they have six biosimilars in limited competition space and one new biological entity in their pipeline. And it is their pipeline is basically dominated by drugs catering to the autoimmune disorders and oncology segments, with four of the top 15 biologics in its pipeline. So their biologics R&D facility, which is in Hubli, Karnataka, includes clone and bioassay development platforms. So basically, it's a high-end analytical platform and formulation development engine. They have recently concluded a capex cycle of around 1,000 crores for capacity enhancements and future initiatives. And amongst this capex, 35% of the fund went to the biological facility in Dharwad, Karnataka, and 20% was for the transdermal related capex at the Bengaluru facility. So they also plan to enter the synthetic albumin segment in India by setting up a new facility, uh, a 150,000 liter fermentation with a 150,000 liter fermentation capacity. Next, we move on to their regulatory, sorry, next we move on to their segment-wise contribution of the API business. We can see uh, oncology has been contributing the most, around 49%, and then there's non-oncology with around 41%, and the others contribute less than 5%. Uh, Formulation business split. So initially, say some 2018, 2019, and even 2020, US used to dominate the formulation business split. So most of their sales were to the USA. But however, because of the import alert in 2021, they have since then been shifting their focus to the Europe market. And currently, as of quarter 4 of FY23, they are around 49% of their formulation business comes from Europe. So regulatory filings like DMF, as in a DMF is a drug master file. It is a submission to the FDA basically. So that provides like information, detailed information about their facilities or the processes that they use and anything that they use in manufacturing, processing, packaging. So they file for such, I mean, they have multiple products. Like I said, they plan to launch 3 to 4 APIs every year. And they have other generics as well, which they keep filing for say the ANDAs or EU filings. But as we can see in USA, the approvals are still largely pending because of the import alert. So that process is kind of slowed down for them. So, but other than that, if we talk about EU for them, then now the number of applications and approvals have only increased over time. So they're kind of shifting their focus from the USA to the EU region. But however, the US market is also pretty big for them. So the getting the issue resolved is very critical for them. So let's talk about the board of directors. I wouldn't go into it much since I mean it is one of our forensics checks as well that if everyone on the board is makes sense. So yeah, I mean I read about them, everyone, and their position is pretty much justified, I'd say. But let's talk about Mr. Vishnukant Chaturbuj Bhutada. He's the promoter of the company. So he's someone that, like, I mean, I read on forums or even Value Picker for that matter, that everyone speaks very highly of this person, and he's the main reason for like Shilpa to I mean at the position that they are at today. He's the reason for their growth, is what they say. So he was someone who was born into a family that was engaged in cotton trading. So he's a B Pharma graduate, and he wanted to break away from his family's tradition, that is cotton trading, and he wanted to make use of his degree and wanted to do it differently and in his own hometown, and that's something that he did. He's from Raichur, Karnataka. That's where he started with the first Shilpa antibiotics company, I think. Yeah. So other than that, there are total 8 people on the board, and 5 of them are independent directors. So independent directors. So around 63% of the board is filled with independent directors. So moving on to the shareholding pattern, majority is held by the promoters, that is 50%, and then FIIs, DIS, FIS 13, 14%, and then the public also holds around 36%. Promoter holdings, basically they're all members from either the Bhutada family or the Inani family, and they're both actually both the families are related, so you could consider them as uh, one family. So yeah, there's no one other than members of this family, I'd say. So FII holdings, we can see the firms which are there. There's Malabar Select Fund. They are invested through two different companies, Malabar India Fund and Malabar Select Fund, 1.58% and then 1.8%. And then there's Think India with 2.02%, and then Tafi Investors is also there, and then India Opportunities Growth Fund. However, so yeah, their promoters have initiated pledges of 12.9%. So the pledging of shares, I think it began in 2017. At that time, it was some 3.46%, but over time, yeah, it has increased, especially, I mean, because of this import alert and also the company reporting losses in their formulation segment, etc. And yeah, major DIIs as well have exited, like ICICI, then Nippon, then Pivotal Enterprises, Baring India Fund. They've all exited by 2021. Forensics analysis. So yeah, the company scored pretty good, I'd say, 73.9%. They got 17 out of the 23 checks. So some of the things that I noted down was auditor remuneration. It has grown faster than the revenue growth in FY21 and FY22. And the 3 year CAGR for remuneration growth is also higher than that of the revenue growth CAGR. Then, does the company pay rent to its promoters of KMP or relatives of promoter or KMP? So yeah, they have paid 13 lakhs rent to relatives of KMP. However, like this, I'd say this is not very concerning as the total RPT is around 27 crores and the RPT by sales ratio is 2.36%. Then, does the company buy from or sell to promoter, KMP, director controlled entities? So they have sold goods worth 4.2 lakhs to their JV Reva Medicare. They also bought goods worth 2.09 crores from their JV Shravati Advance. And they also sold goods of 10.3 lakhs to their investment entity Oxila Pharmaceuticals and purchased goods worth 2.63 crore from the same. And lastly, this is something, yeah, does the director's remuneration for the year as percentage of PAT exceed 11%? So Mr. Bhutada, I misspelled his name, sorry. Mr. Bhutada takes rupees 9.66 crores as his remuneration, which is 16% of PAT. That is 16.7 crores. So that is a little concerning. But other than that, the other expenses, they are 26% greater than because mostly because they're high legal expenses. So if you look at the legal and professional fees line item, that is the amount is pretty high. I think it's 50 crores or something. So high legal expenses due to their remedial measures and compliance cost of the US FDA import alert, and then other resolution fees as well, because they are involving third party firms to kind of resolve this issue. Yeah, so now let's talk about the thing that I've been mentioning again and again. That's the import alert, their black swan event, I'd say. So yeah, so first they received a warning letter for multiple manufacturing violations from the US FDA in October 2020. So the Telangana plant that they had fell afoul of the FDA basically after they failed to address complaints about a 2019 batch of improperly sealed injectable drugs. So what Shilpa said was that the error was caused because of a breakdown of their sealing machine. But they, however, still released the batches onto the market, failing to notify the FDA in the process. So that is why later on, after the warning letter, the US FDA slapped an import alert on Shilpa Medicare's formulation plant in Jadcherla, Telangana. So so they received this import alert in February 2021. So the FDA spared three Shilpa drugs in its alert: injectable azacitidine used to treat used to treat a certain syndrome, and then another capsule and a tablet, which are all like chemotherapy drugs for cancer. So those drugs also just so happen to account for the bulk of Shilpa's sales from formulations. And this specific azacitidine, it contributed in 2020, it contributed to around 85% of the entire formulations. So the import alert, it specifically applies to Shilpa's like finished drug manufacturing plant at the Jadcherla unit. And yeah, so it is a special economic zone. And the current status of this import alert is basically they have started the process of site transfer of a few products, 6 products, and under CB 30 route, CBS changes being affected. It's one of the terminologies. It basically implies that the approval will be faster. So they have done this to a third party manufacturing facility to offset the impact of any of the exemptions by the US FDA. So only the site transfer of critical products is ongoing, It is sort of like a hedging strategy to de-risk against their single site operations. And yeah, they are also filing the ANDA and NDA applications, and review is still going on. I mean, US FDA is still, yet to review whatever they have filed. And yeah, I've already talked about this. So if we see during, one second, yeah. So this is a while before they received the warning letter in 2020. You can see how the price dropped by more than 100 rupees from 1st October 2020 to 20th November 2020. It went from 558 to 424. And then in Feb 12th. So they received the import alert on 17th of Feb. And on 12th of Feb, the price was 430. And then by 19th of March, it fell to 330 because of the specific import alert. So again, 100 rupees. But one thing I noticed was the market, I don't know what would be the right word, but market has been fair with Shilpa, I guess, because if you see, even though it fell from here, for 19 March 2021, fell to 330, but later on it went to around 600 rupees. So I feel that whenever the market has been fair, as in whenever the company is under some constraint or is not performing, the market derates the company. But when they start performing, or they are consistently putting out results, the market re-rates it and values it at a higher. I mean, you see it from the P ratio also. It is pretty volatile, I'd say. Next, right. Yeah. Next, we move on to their key metrics. Yeah. So business value generation on account that of the dip that we saw in the formulation business because of pricing pressure and then also the import alert. This has impacted their profitability, and also they are they have been aggressively spending on capex since the past 6-7 years, which has led to depressed ROE and ROC numbers. They are However, what the management says in their the latest con call is that their revenue and PAT will improve on the account of cost-cutting measures, then increasing the volume, increasing the product mix, and adding more geographies for the formulations, and also getting their in-licensing revenue, and then reduction in capex. Reduction in capex because their peak capex cycle is over. I will be talking about it further, but yeah. And the management expects revenue to grow more than 10% in more than 10% in FY24. So this year, double digit growth. And yeah, because of this, there's a sharp decline in EBITDA gross margins as well, due to their unfavorable revenue mix, and then pricing pressure again, and then high raw material costs. So again, now let's move on to their EBITDA and EBITDA percentage. If we see from FY14 to say FY21, or even 22 for that matter, they have been very consistent. There's always 22% growth if you take an average for the past 10 years, past 8 years. And however, then from FY21, since they received the import alert, we kind of see the degrowth. And then here, because of pricing pressure, I think this pricing pressure, I've also done a peer comparison later on. We can kind of see other companies also face the same issue, and if at the same time they were also doing capex, then you kind of get to see similar metrics, which I will get into. But again, PAT percentage we have talked about, we can see a very similar pattern to the EBITDA and EBITDA percentage. Like, they were pretty consistent until FY21, and after that they have been going down, declining. So capex specifically, so over the last 6-7 years, SML Shilpa has been in a capex cycle, and they have spent more than 1700 crores on capex and R&D to augment their capabilities across formulations and biologics. So majority of their capex was debt funded as well. So now that their peak capex cycle is kind of over, what uh, everyone expects is to see a good reduction in debt from FY24. And the number of facilities also, because the capex cycle and capacity uh, they're increasing the capacities, so the number of facilities offering various formulations also have increased to 11 total 11 facilities in FY22. As of FY20 there were 5. Then yeah, like I mentioned earlier, they have recently concluded a capex of 1,000 crores. So they have also set up an R&D and manufacturing facility in Bellur, Dharwad, that is in Karnataka, to foray into the biosimilar segment for an initial investment of 360 crore rupees. And they have also set up a new facility with an investment of 275 crores for synthetic albumin. And yeah, owing to their funded capex cycle, their gross debt stood at 797 crores as of FY23. Yeah, and because of that, again, they have depressed ROE and ROCE numbers. But however, now that their peak capex cycle is over, their ROE and ROCE numbers should pump back up. Yeah, let's quickly go to the pure comparison. So yeah, definitely the revenue is, I mean, Laurus Labs, Strides Pharma, Aarti Drugs are much on the larger side, whereas SMS Pharma is half of SML's revenue. SML is Shilpa Medicare Limited. And yeah, if we see the EBITDA PAT percentage here, we observe that only Laurus and Aarti Drugs are showing stable performance, whereas the rest of the peers are struggling due to like pricing pressures, high raw material costs, etc. However, in the case of Shilpa, along with these factors, at the same time, they also had to deal with the import alert. That is why they are slightly in a worse position. Same with the ROE numbers. Like I said, SML, then SMS Pharma and Strides Pharma, they were also doing, they were all doing aggressive capex spends. So at the same time, along with these other factors, they had to deal with this as well, and that is why their ROA numbers are also declined. And yeah, so there was also a cash flow deficit, obviously. Then D again, similar situation. They all had done a debt funded capex. I mean, all as in Shilpa, SMS, and then Strides Pharma. That is why you kind of see a similar. I mean, the debt to equity ratio wise, Shilpa's debt to equity ratio is pretty low. But when we see the ICR, I mean, they're not able to cover for the debt that they have taken. It is less than 4. Only in the case of Loris, we can see that, I mean, D ratio is pretty low and their ICR is greater than 4 at 10.15. Same with Aarti, similar situation. Then lastly, uh, their price to book value. Currently, Shilpa is trading at like 1.2x and SMS at 1.7x, Strides also at 1.7, whereas Loris is almost at 5x, and then Aarti is almost at 4x. Yeah, now moving on to the growth triggers. Firstly, we have recombinant albumin. So initially, the therapeutic human serum albumin, which is known as HSA, it is primarily derived from donated human blood. So this is mainly used in the treatment of liver cirrhosis and hemorrhage, shock, severe burns, scald, plastic surgery, hypoproteinemia, renal edema, etc. So currently, the demand of this HSA is about 1,000 metric tons per year worldwide, and 70% of this demand comes from Asia. So in recent years, due to the shortage of blood plasma, HSA supply is in shortage, particularly in China and Asian countries. And India remains a large importer of both plasma and human serum albumin, HSA. Simultaneously, the threat of bloodborne diseases such as AIDS, hepatitis, has and HIV say has become more and more concerning. So FDA and EMEA explicitly encourage the application of the recombinant version of HSA with animal component free. So Shilpa has something called nav-albumin in works, which is a synthetically developed product as compared to the current process of drawing the same from blood plasma, that is the normal albumin, as compared to the recombinant albumin. So the reason why recombinant albumin marks above HSA, that is human serum albumin, is because the process is slightly simpler. It has a predictable supply chain, and it is produced from a scalable fermentation process. And second is it has significantly a higher degree of purity, 99.99%. And lastly, it is free from any potential contamination from HIV, AIDS, HPV, or hepatitis, etc. Since chemically defined media components are used throughout its in its production. So recombinant albumin also can be used as an excipient as in an inactive substance that is used as a medium for a final drug. So it can be sold this as an excipient. It can be sold without clinical trials. So it should be very easy for them to gain market share in regulated markets once they get past all these FDAs, etc. Then again, recombinant albumin as a drug. Shilpa's nav-albumin is in the phase 1 of human trials, and the trials are being conducted for both EU and Indian markets. So in India as well, it is a shortage product. India itself remains a net importer for albumin plasma, so they can gain a significant market share, being the only player in India for recombinant albumin. So approval, yeah, for the export markets, though, I mean, it would take pretty long. I'd say more, probably 5 years or something. So that would be a long led project. So Indian market itself can be lucrative for them with only two players in HSA, Reliance Life and Intas. They import major quantities as currently. So the market or global market is something $6 to $7 billion as of FY23, and they have a granted patent for from the US and Europe for this recombinant version of albumin. It is a very high margin product, I'd say, and it has high value also. So rather than pricing, their focus is on the availability itself. So because this product is always in shortage, so what they are doing is they have set up of 150,000 liter fermentation capacity. So in that way, that would be, I mean, that would be their key advantage, I'd say. So since it is a shortage product, there'll be also less marketing effort here. So company, other than that, the company is also looking at like global partnerships with the Indian facility. So they have a specific subsidiary for only producing only for this albumin part, albumin segment. So that will serve as a blueprint to expand the albumin production network across different geographies. Currently, it is expected to launch by the end of 2024 calendar year 2024. Then the second trigger would be their API business, which is their cash cow. Recently, they transferred the API business of the company consisting of Unit 1 and Unit 2 situated at Raichur by a way of slump sale to their wholly owned subsidiary, Shilpa Life Sciences Private Limited. And this was done to transfer the respective debt basically so that their net leverage kind of improves, which it did. And SML also approved has also like approved fundraising plans in the transferred entity from strategic investors through private placement or an IPO. So currently, this API business is the only cash cow for SML, like I said, because the formulations business is already reeling under the pressure of the import alert. So SML plans commercializations of 3 to 4 new APIs per year, capacity expansion initiatives and strong growth momentum in this segment. So they have also added peptide and polymer divisions and a new oncology intermediate to the production blocks for stronger backward integration. And their API and API R&D team as well has delivered 8 projects successfully and taken validation at plant scale as of FY23, while 25 new projects are yet in process development for oncology and non-oncology molecules. Next trigger would be formulations and biologics. So first, let's talk about formulations. So like I said, SML is an aggressive R&D spender, 12% of sales as of FY23, and 22 or 16%, I think, which are targeted towards lucrative opportunities in the export markets. So they have an attractive pipeline and formulation. So from a revenue perspective, EU markets, now that they have shifted from US to EU, uh, they should be contributing significantly given the product pipeline and recent approvals. And further, the company has also spoken on third party, like in their concalls, they have spoken about third party transfers, which should aid pipeline monetization for the US business as well. Due to the nature of their business, getting approvals for new molecule and commercialization of the pre-existing molecules in the pipeline in the US markets will have a margin accretive impact on the formulations business for them. So launches in Europe, specifically, they have launched the Metrexed RTU injection in 2021 and also approved Calopride oral. And then also they have relaunched ODF products in India. Like I had already talked about this. They commissioned a combo line for ODF and TDS. And then biologics. So this is like a key segment. SML, like I said, it's their strategic growth lever. So they have significantly invested in this segment, 500 crores in the Dharwad plant and 275 crores in the albumin plant. So currently, obviously, they don't contribute towards the business, and yeah, so they have made significant progress in this segment with development of one NB and 6 biosimilars in limited competition space with significant cost advantage. So they are targeting long lead niche molecules which are in advanced phases of human and animal trials, and hence would start to monetize from FY25 is what I think by the dates they have given for albumin and other 2 drugs. So Shilpa Biologicals Private Limited and Shilpa Biocare, these are the 2 subsidiaries that work on biologics and biosimilars. So they now combined, they have 11 biosimilars and one new biological entity in their pipeline, and they are dominated by drugs catering to the autoimmune disorders, ophthalmics, and blood substitute segments, with 6 of the top 10 biologics in its pipeline. So these are all niche, high margin opportunities that cater to very highly unmet clinical needs. So, I mean, one product is the albumin one, recombinant albumin, which is in itself is one growth trigger. But they also have other products. I mean, they don't mention much about it, but I could tell you about 2 more products. That is aflibercept. It is a very complex molecule, and this itself has a market of $9 billion globally. So in India, again, no generics are available in regards to this product. So they are starting with the phase 3 for this aflibercept product, and they have received the permission as well from the authorities to start the trials. Other than that, they have one product named Humira, which is a high concentration adalimumab, which nobody has launched in India again. So with this, like again, here also they are in the phase 3 trials, and they with the successful completion of the phase 3, using the European R&D, they will start putting out this product as well in the market, firstly India. So this again is this is a high concentration version of that specific product, which is not available in India. But globally, this is also a $20 billion plus market. So their revenue target, according to them, for FY24 is that they will be doing around 20-25 crores. I mean, from this one product itself. So yeah, Next. So,
Shantanu, I have a
yeah,
question.
sorry. Yeah,
Maybe slide.
yeah,
I'm audible clearly, no?
yeah.
Okay. So, from all these drugs, what do you expect? I mean, what could be the sales figure? Say everything goes right. I mean, their US FDA that that overhang goes away by FY
Hmm.
24 or 25. What is your expectation on the sales number?
Okay, so the sales number actually, I have tried to uh, include that in the valuation model, but as in it is difficult to determine an exact sales figure. But I found other reports, but those are as of 2021. They have valued this like to contribute around 80 crores, then 120 crores in 2026. Other than that, I could not find any figure as such, except this specific one which I was talking about, adalimumab. They say they'll do around 20-25 crores from it. But they keep mentioning that their albumin is going to be a very high value product. So to give a figure, it is slightly difficult. So I've just taken a certain percentage as such.
Okay. Okay. Yeah. Please.
Yeah. Lastly, the key risks are all interconnected, basically. It's so that US FDA import alert, basically, they need to resolve it, and for them to grow in their formulation segment, it is very necessary. And yeah, their monetization of some products in their pipeline also depends on the final approval from these authorities like the US FDA or EU. Now, even say albumin, there's some negative action taken by any authority will directly harm them because they have spent 275 crores for this specific product. So that risk is always there for them. And other than that, yeah, obviously, if the resolution gets delayed more, that will also start reflecting in their numbers. And yeah, then they also have to pay their repay their debt. So even if they are not doing much capex anymore, but they have to maintain their profitability. So they will have to resolve this issue as soon as possible. And yeah, okay, no, yeah. So now moving on to the valuation model. So this is the valuation model for Shilpa. So I'd like to thank Rishabh and Sonakshi for helping me out with their models. So what I have done is I've kind of taken API formulations and then others sales differently, and then try to model them into the total net sales amount. So for API, uh, I've in the bull case I've assumed it to grow by 15% in 24.
Shantanu will only
Yeah.
look at base case. Yeah.
Okay. Yeah. So for the API, yeah. So for the base case, I've assumed for the API business to grow by 12% in 24 FY 2024, and then 15% in 2025 and 18% in 2026. Similarly for formulations, 15%, 20%, and 25%. And then biologics, from FY 2025 is when I'm expecting for all these products to contribute to their net sales. So in the base case, I've been a little conservative. I've taken 15% and 20%. But according to other reports, they are very, I would say, bullish. I mean, they expect 80 and then 120 crores 2025, 2026. But I'm not really sure, because I don't find any figure or anything in their con calls or their annual reports that they have mentioned. So I find it a little hard to determine. So then I've added all of them into the net sales, and then there's COGS, then gross profit, and sorry, the gross margin. I've taken base case. I've taken 60%, and then for SG&A, I took I took 10% because because they have said that most of their costs will be going down. So I took 2020, yeah, so I took 10%, yeah, so 10% growth every year from 2024 to 2026. Then in the case of EBITDA, I've taken, yeah, in the base case, I've taken 10% for 2024, then 15% for 2025, and then 15% for 2026. For depreciation, I've used the fixed asset turnover, same as what we did for Punjab Chemical. So I have predicted the expected fixed asset by multiplying it with the assumed fixed asset turnover, which I took point 0.8 as point 0.8 in in 2024, and then as one in FY21 and 2026. Because their peak capex cycle is over, and now their fixed asset turnover ratios should ideally increase. So that is why I've taken these numbers. And then for depreciation, I've taken 6%. So 89, 82, and 99, and that is what is reflected here. Other income I've taken as zero because I was not sure, since it is pretty inconsistent and I was not sure how to model it. For interest cost, I have modeled it here. So this interest rate was 7% for the year FY 2023. Same way I've done for FY24 and found the interest cost that comes to 46.91. So, and then also FY25. And for 26, I've just, sorry, yeah, for 26, again, I've just taken the same as 2025's value, that is 28. So in this, yeah, sorry. Okay, for tax, I've taken 25% because there's no tax guidance as such. And yeah, then PAT comes to minus 13 for FY 2024 in the base case. And then the valuation based on market cap to sales, I've taken the 5-year median, 3-year median, 1-year median, and took the average of all the three, and then multiplied sales by the value 3.2, then found the market cap. So according to MCAP to sales, the current market price should be 439, and the fair value should be 439 in 2024. However, using EV/EBITDA, I got something very different. So I'm slightly confused here. So EV/EBITDA, again, I did the same thing: 5-year median, 3-year median, 1-year median. Then average comes to 19, and then sales multiplied by this value again. So the market, the enterprise value comes to 2241 in FY24. And debt, yeah, again, debt is from the same model, CFO by EBITDA, then subtracted it from, yeah. So basically, subtracting subtracting CFO from the debt. And that way I got the figures for the debt for 2024 and 2025. And cash and cash equivalents, as of 2023, they would stood at 22 crores. I've just taken that value for the next 3 years as well. But here what happened was my market cap is very different from when I mean from here. So it's some 16299 crores. I mean, using that formula, that is EV minus debt plus cash and cash equivalents. But here the current market price, it shows something very different. It falls to rupees 187. So I'm a little confused with both these valuation models. I mean, this shows a different picture, but this one is, I mean, it's far off. So I would require help here. And yeah, other than that, no, yeah, that's it.
Thanks, Shantanu. So, say I like the presentation on the valuation. I think a lot of assumptions are not clear to me in the sense that you've told a lot of numbers, but I haven't heard from you at all what is the basis for those numbers, right? Apart from, say, depreciation, interest, etc. But why is your revenue growth assumption such and such? Why is your EBITDA margin assumption such and such? Okay, these things I haven't heard. So same feedback as I had given to Ashutosh, that these numbers have to sort of come from your understanding of the business, right? Which I thought you spent a lot of time trying to understand the business, which reflected in your PPT, like you covered the growth triggers, etc. So that has to translate into
The model.
numbers here. Yeah. So, for example, so the valuation part, I will not even address it because I think a lot of work needs to go in there. I will, in fact, dial you back to one other basic question that
Ah,
anybody looking at Shilpa's sort of screener page will ask. So, what happened to them in FY23? So their margins collapsed from 18% in FY22 to 9% in FY23. Why did that happen? Like what happened in that year? Because that will tell you how to model EBITDA margin in 2024, no? Because if
yeah,
something structural has gone wrong, then maybe your 10% modeling makes sense. But if there was a one-time event, some raw material spiked or the realizations dropped due to some inventory issue, and now they are coming back, the latest quarter margins are much better. The latest quarter margin is 14%.
yeah,
Quarter before that is 12%. But I think your assumption is 10% for FY24, right?
yeah.
So that is, those are, I didn't hear any of these reasoning, Shantanu. So that is, before even getting into a model evaluation, these reasonings are not clear to me. So anything on FY23, like what happened there and how you expect them to recover from that in FY24?
Yeah, so FY 2023, I mean, it was like I said in the pure comparison, like one was the pricing pressure than raw material costs. But other than that, they were also aggressively spending on capex, which garnered a lot of debt for them. And another thing was, other than that, they also had remediation costs and had to deal with the import alert and its complications. So even, I mean, from whatever I read, I could only find these factors as such, and
No,
because of
so
which they're
yeah,
sorry.
so Shantanu, these are, I mean, I understand you're trying to like say the logical reasons, but you could have actually looked at the cost breakup FY22
Okay.
versus FY23 and tried to identify where have they lost out. Is it in gross margins? Is it in employee cost? Is it in other costs? So that analysis you clearly haven't done. So that would have
Mhm.
told you that they lost out 6% in gross margin and 3% in employee costs, right? So
Okay.
that's what
Yeah.
caused their, the EBITDA margin to collapse by 9%. So if you identify those, only then you can try to identify what were the reasons, try to identify from management commentary, what can be the recovery potential, therefore, and therefore model it accordingly, right? So
Okay. Yes.
the basis of modeling, I think I have not been able to communicate to most of you. That is my failure. The basis of modeling is not just putting up an Excel sheet and manipulating some numbers. The crux of modeling is actually to understand the growth triggers and one sort of trigger which all of you seem to be forgetting, which is margin trigger. So we have asked you to identify triggers. You guys have sort of interpreted that as only growth triggers. So triggers can be twofold. One is a revenue, which is a growth trigger. The other is a margin trigger. So in case of Shilpa, I think there will be a huge margin trigger. If, in the last 10 years, their margins have ranged in 70 to 20%, but suddenly it came down to 9%. So unless something has gone wrong horribly in the company structurally, they should start rebounding back. And it is also evident in the latest quarter results if you check. So that aspect is missing. Yeah. So margin
Yeah.
trigger is one aspect that you guys need to also start thinking about, which Shantanu, I think you missed. You only covered the growth
Mm.
triggers.
Yeah.
Yeah, and modeling as an exercise, and this is to everybody, guys. This is not only for Shantanu. Modeling as an exercise is not your ability to juggle numbers on an Excel sheet. It is your understanding of where the business is at present and what triggers are there to change the trajectory in the next few years, translating that understanding into numbers. So every number will have an explanation behind it. Yeah, I know modeling everything is not possible. Like maybe you tried to do something very ambitious here, Shantanu. Like you tried to model API
Mm.
formulations and biologics separately. I don't know whether you have that kind of rich information available from public data or not. But a more realistic attempt could be, if you don't have this kind of segmental data, you can try to
Okay.
model the entire revenue together, but based on guidance, or like you have to provide justification for the percentages, the growth percentages that you've taken, right? Either it
Yeah.
has to come from management guidance, or you have to say that historically they've grown like this, so I'm assuming basis history that they will continue to grow like this, or I foresee these two headwinds, so the historical growth rate has been moderated a little while. So there has to be, like, every metric has to have a justification,
Yes.
which should be based on your understanding of the story of the business, right? So that is missing. So that's why the valuation piece I will not address, Shantanu. I would request you
Yeah.
to take another crack at this, with
Yeah.
trying to model everything with reasoning and with logic. And maybe you can try
Yes.
to model only 2024. Don't even try to model, beyond that.
Okay. I will do that.
Take another crack at that. If you need any help, reach out. For example, today morning we had a
Yeah.
session with Ashutosh. So if you need any inputs on that, or if you like want to give a presentation, you let us know. We can do it sometime other than the stand up as well. Yeah.
Yes.
Other
Yes.
than
Sure.
that, a good presentation. I did not know anything about the company, as in I only knew that it had taken a horrible beating in the last 1 2 years, and that it was probably in a value zone. That's all I knew. So you did a great job of making me and probably Gaurav also aware of the fundamentals of the business. So from here, I can now build it up. I can't use your valuation model because it's not up
Hmm.
to the mark, but I can probably, you've given me some pointers which I can use to start forming my mental model and building my valuation, right? So the
Yeah.
eventual goal for all of you is to sort of come to a level of competency where not only are you able to communicate parts of the story, but you're able to sort of synthesize all the elements of the story together into triggers, and then translate those triggers and that understanding into, say, a 1 year or 3 year forward valuation. Yeah. So that's where the journey is for uh, all of you. Yeah. So thanks for the presentation.
Thank you.
Shantanu, I had a couple of questions. So
Gaurav, you're not audible at all.
oh, okay. Wait one
Yeah,
second.
I think some earphone issue.
Hello, am I
Yeah,
audible?
now much better.
Yeah.
Oh, great.
Yeah.
Okay. So my first question is, what are they? I mean, their material costs. So they're importing their materials, right? Mostly from China,
Uh,
their APIs and all.
for 1 second.
Do you have any idea?
I had noted it down. I'm trying to find it.
Well, you can let me know that later. And
Yeah.
September 22, I see that their material cost spiked up quite a bit. Also in June and also in December, but now in March 23, it's reducing. So this is something I don't know if it
Yeah.
would sustain. Not sure about this one. Uh, my second part is for this company. I mean, if I have to imagine this company to turn around, what are the things that should go right now in the next
One
two
would be
quarters?
that, yeah, one would be the albumin thing.
Hmm.
If they, I mean, they are in phase one trials, but if they get all the necessary, uh, I mean, approvals for it, and then they launch it, say by 2024 end, that would be one big turnaround for them.
But
And sorry.
one question on that one. One question on that one. Will it get launched by 2024 or beyond? Does it get approved in 1 year time, or I think it takes more than 1 year, no?
Uh, yeah, but that would be for the export market, right? For
Okay.
India, they could do it immediately.
Okay.
But Shantanu, then this is where Gaurav's first question, where he stopped you in the presentation and he asked, what is the revenue potential from that? So do you have a figure? See, if the
No.
potential from India is 50 crores, then kya turnaround hoga? Kuch bhi nahi.
Huh.
But
नहीं.
if the potential is 200, 300 crores, then yeah, it's very interesting, right? So
Yeah.
see, because you're citing that as a reason for turnaround, like what can go right for the company to turn around, you need to have some idea कि ये company आज 1,000 crore कर रही है, तो अगर 25 करोड़ आएगा एल्ब्यूमिन से तो कोई फर्क नहीं पड़ेगा ना.
Hmm. Yeah, and other than that, they have those, I mean, other six products in
Hmm.
biologics itself, which also they
That's
plan to
also
launch
tiny,
in
no?
20. Yeah, that is also each one is around 20,
25.
25 crore revenue.
छोड़ दो उसको. Then we are left with API and formulations. These two.
Yeah,
And I mean, they have got a US FDA for their formulations.
yeah, one facility pay.
तो वो वाला तो रेवेन्यू वी कैन राइट ऑफ इजीली. आई मीन वो नहीं आने वाला है शायद से नेक्स्ट 1-2 साल के लिए, राइट?
Hmm.
व्हाट डू यू थिंक? देन एपीआई से ही जितना ग्रोथ आएगा.
Yeah, but no, actually for formulations, there are major products. I mean, there were three drugs which the US FDA exempted. So
Exactly, yeah.
that was only around like 90% of their sales of
Ah,
formulations.
okay, okay.
So I don't think so there'll be an issue in formulations because other than that, they're also shifting the market from US to Europe. And so Europe, okay, I forgot. I'd seen some data point, but Europe is also like been contributing significantly now.
Okay.
So Shantanu, the net impact of the US FDA import alert is only 10% revenues from one plant, is it?
Uh, yeah, of the total formulation sales.
Yeah, of the total formulation sales, only
But
10%.
but that would be only with sales. But other than that, they have spent a lot also of on remediation costs. I
Okay.
could give you the figures. I don't remember now, but I've noted it down.
Okay. Okay. Yeah, maybe that you can let us know because then,
Yeah.
But that is a recurring cost or a one-time cost that they've spent?
It is a recurring cost because the remediation thing was one time, but then other than that, they also had to get into like with other third party companies to like kind of resolve and file all these compliances, etc. And also then another thing was that because they got this import alert, they had some products in their pipeline waiting for approval, but that also got delayed significantly.
Right. So the impact is not only 10%, no? The impact is
Yeah,
they are
no.
not able to launch any new products.
Yeah,
So that's a bigger impact. Yeah,
it
that's
is.
quite
It
a
is.
significant. Yeah. Yeah. Right. So that can be a trigger, right? If the US FDA comes through, then they can start registering their new ANDAs and they can start
Yeah.
getting higher revenues, right? Any indication from management from con calls
No.
on when they are expecting the FDA audit, or is an audit going to be required for the import alert to go away? Okay.
So what they have said is like authorities from Canada and Australia, they have audited, and
Okay.
US FDA. So from the company's side, what they say is they are fully done. They have filed all the applications and
Right.
met all the compliances that they had defaulted earlier. But
Right.
and what they are waiting for is US FDA to do a physical audit, I think
Audit.
so.
Yeah. Got
Yeah.
it. So Australia and Canada have cleared the plant again, or
Yeah, they have.
they have. So now they can sell products to Australia and Canada at least.
Yeah.
Okay. Okay. So it's just a matter of when the US FDA finds time to come and do a physical audit.
Yes, it is.
And they are not indicating whether it is possible in FY24 or FY25.
No.
Okay.
No, nothing.
Got it. So this is interesting because Gaurav, the same situation prevails with Solara. So Solara, one of their plants, Cuddalore plant, they got a observation, and as a result of which now no new drugs can be manufactured there. And they have been ready since more than a year waiting for US FDA. Same situation.
Yeah,
So once
my follow-up question was, when did this FDA notice came? It was in
21,
June.
I think, Shantanu, right?
21. Okay.
February 17th of 2021.
2021.
Long time.
Okay. Long time. Okay. So
I think that's why in pharma, once there is a US FDA observation, which is not a voluntary, so there can be two types of observations. One is I think, a voluntary observation, which means that it is not very serious. The plant is requested to correct it themselves, so there is no action as such. And the other is called an OAI, I think, official something.
Hmm.
If that comes, then you're screwed for the next 2 3 years, because, and especially
Mm.
due to COVID now, they have huge backlogs of plants to visit, right? So
Yeah.
Hmm.
everything is getting delayed a lot. So you lose out on a lot of potential revenue.
Let's see Modi's visit. Does it help out anything? But I think there. If you look at the downside risk to this company, do you see any risk? I mean, low margin, valuation wise beaten down. They still have. I mean, they are in the field of oncology, which is probably a very. I mean. I mean, the cancer. I was reading in one of these con call of HCG. I think the rate at which cancer is growing is almost 12 to 15% CAGR. So that's also there. So
Mm.
from a downside risk point of view, Nirvan, what's your assessment? And Shantanu
My
also.
assessment, okay, my assessment is that downside is pretty much protected in my opinion.
Hmm. Yeah,
Which is why I'm interested in bets like Solara, bets like Shilpa. So, I mean, how much worse can a company do if they've gone from 18%? Just check their FY23 numbers and compare it with FY22. You will
correct.
get the answer yourself. Of course, we have to study more to. That's what I was discussing with Shantanu, that if something structural has gone wrong, then it's a different matter. But it doesn't look like structural, because latest quarter, the margins are going up
Hmm.
significantly. So they had two horrible quarters, quarter one and quarter two, and then quarter three and quarter four onwards, their margins have at least started taking off. The sales have not grown, but the margins are again back up. So yeah, so at least if you, even if you're flat on sales, if you deliver a 16% or a 15% margin next year, your EBITDA goes up quite a lot, right? And that should, give rise to some kind of premium on your stock from current levels.
Yeah.
But yeah, we need to do the valuation exercise more carefully to sort of conclude on.
One question. They also have very high intangible assets. I mean, 486 crore in 23. That just popped up in 23. Did they acquire some company this year? Shantanu,
Mm.
question to you.
This year, no, they haven't. Not this
Okay.
year.
Okay. So it's there in screener. Maybe you can check this
Okay,
one.
I will. I will.
Yeah. All right.
It was intangible assets, right?
Yeah. 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 That one. 486 crore.
Okay. Well, I'll actually check the annual report for this because I missed this.
Annual report won't be available, Shantanu. So because
Acha, okay, sorry.
FY23,
Yeah.
you'll need to check the press releases on BSE or one of the
हाँ.
con calls. कहीं पे तो ये बात होगी उसकी, I think. ये I
Hmm.
think
Yeah.
acquisition ही हो सकता है, और तो कुछ नहीं होगा.
Yeah.
ये standalone तो नहीं देख रहे हो ना? Consolidated है ना?
Yeah,
हाँ,
consolidated.
Consolidated.
consolidated है. तो यार ये तो acquisition ही होगा.
इनके शॉर्ट टर्म बोरोइंग्स भी काफी बढ़ गए एंड लॉन्ग टर्म बोरोइंग्स घट गए. So let's see. I don't know how to interpret it though. मतलब केपेक्स बना रहा है शॉर्ट टर्म लोन्स ले लेके probably.
Uh, yeah, they've definitely completed their capex, Shantanu. That's what they are saying, is it?
Yeah, only some 175 crores is left for their
Okay.
albumin thing.
Okay. Yeah, interesting observation, Gaurav. I don't understand what is happening with long term and short term here.
हाँ. और बाकी तो कुछ इनके शेयर कैपिटल रिजर्व्स भी घटे थोड़ा.
हाँ, लॉस हुआ है ना.
हाँ, वो वाला हुआ. और बाकी let's see. I mean, yeah. I mean, what
Their
else could they have? Huh?
cash generation is very good. So this year
हाँ.
they have done a EBITDA of 98 crores, but cash from operating activities is 226 crores. So because they've reduced a lot of receivables, lot of inventory has been reduced. So good things are also happening.
हाँ. And the promoter seems trustworthy. I mean, he's a stalwart. That's what I
Okay.
got.
That's what
From
Shantanu
Shantanu.
also said.
Yeah, yeah.
Yeah.
From Shantanu's point of
And
view.
also another thing, like I had said when assigning this company to Shantanu, was that Malabar is invested from twice of the current price. And Malabar is like Nalanda Capital. They don't invest in shady cases. So yeah.
Acha, you don't. It's in the DII, is it, or
FII.
FI.
FI? Ah, right. Okay. Yeah, yeah. Malabar. Yes. They've actually increased in March 22.
Yeah,
Cool. Yeah, there has
yeah.
been a lot of trades going on recently. I mean, very actively traded. I don't know if this is kind of in that stage one of stage investing, like accumulation happening. Possibly, I'm not sure.
You mean across a lot of companies?
No, across this company. I mean, if
Oh,
you look at their
okay.
trades, no, in Screener itself, you will see that recently there's been a lot of bulk deals that's been going on. Even in 22nd
Okay.
June, some, I mean, purchase and sale happened between Parik Brothers and then Graviton Research. I'm not sure. I have to check more, but
Mhm.
I mean, generally there's a lot of activity in March, February quarters also.
I
So
see. Mhm.
yeah, let's see.
I think these are all, sell and buy happening
Hmm,
between same parties because promoter stake and all has not gone up. So
yeah,
not sure. I mean, new guy entry, I think Akash Bansali has entered. Yeah, Akash Bansali has entered in Super Investors. This guy has entered in this quarter. Apart from that, though, I haven't noticed any big change because FII, I can't see any new entry. Only Akash Bansali was a. I'm treating that as good news. And there's this gentleman called Karthik Sundar. I don't know who he is, but he also is a big investor. He has positions in Expro India and Rajaratan Global, a lot of these
nice.
companies. So both of those people have entered in this quarter. So that can also be treated as a sort of a
Right.
signal for value. But yeah, in my opinion, this is the kind of investment where you don't have much to lose. So
Yeah,
yeah, there can only be upside. How much upside, when upside is what we need to sort of
figure out.
calculate.
Yes.
Yeah.
Cool then. I think more or less I
Okay.
have a clarity.
Yeah.
Good.
So Shantanu, the
Yeah,
valuation whenever you can just we'll schedule another 15
yeah,
minutes for the
yeah.
valuation. Try to tie your business understanding into the numbers.
Yeah, I just had one doubt. So, like you said, I was doing it separate. Initially, I'd done it all together, but then I got confused again because, I mean, the growth for each segment is kind of different, and as such, there's no figures to determine how much.
So so the growth for the individual segments, like you have data for historical growth rates, individual
Historic.
segment wise.
I could like from FY14, I could plot it
Oh, they
because they
declare
report.
this. They
Yeah,
declare this, is it?
yeah,
Oh,
yeah, they do. Yeah, from 2019 to they do because that's where I got it from their AR itself.
okay, okay. No, so then it's fine. I mean, I was just missing your justifications for any of these. You were just telling me 12%, 15%, 18%. So,
Yeah,
like, I don't know what they're based on, right? If it's based on your some understanding from your management guidance, then you need to say that. Or if it's just from history, then see, APIs have seemed to have grown at around whatever CAGR for the last 4 years. So are you just using a CAGR, historical CAGR to
no,
project, or
yeah,
are you using some management guidance? I didn't know the reasoning. So that's why
huh.
but if you have data, historical data segment wise, then do a segmental projection.
Yeah, I'll do that. I'll try
Yeah,
and
yeah.
justify because I forgot to write it down while I was doing it,
Hmm.
and I
Yeah, yeah.
myself got confused now.
Yeah,
Right,
try to
right.
make it simple. I mean, I think
Yeah,
the simplest, if you can directly say, okay, top line growth this much, and then as these are the reasons why you will get top line growth, right?
huh.
There might be things you don't know, so you can say, I don't know what would happen in these things, but these are the
Yes,
triggers which will cause the top line growth. And looking at historical margin, like Nirvan always says, right? When you don't have any other data, you can always look back in the history and
yeah,
take that median. Yeah,
See, whenever
average.
you're not sure about something or there's no explicit guidance, you still have to go with a number. No? That's the job of
hmm.
an analyst. So that number has to have some kind of justification behind it. So
Okay,
that just
yeah,
wherever you don't have explicit guidance or explicit, you don't feel confident enough that you have enough data points to model it. You have to still put a figure there, and that figure needs to have a justification. Usually, it's historical, or if you have any other inputs from some other report or something, you can then use that.
yeah,
Yeah,
yeah. I'll get back with this as
yeah,
soon as
yeah,
possible.
sure.
Sure.
Okay. Thank you, Shantanu. Good job.
Thank you,
Thank you.
thank
Good
you.
job.